nice to have this conversation with you, Mr. Rebol. I welcome you to Crypto Times. So first, Mr. Rebol, why don't you give a short introduction to our audience from your side before we proceed with the interview?
Perfect. Cool. Well, then let me dive right in. So I am Max Rebol. I'm running Harbour Industrial Capital, which is a Polkadot-focused VC fund. That's why I'm also wearing the Polkadot t-shirt here today.
Yes.
We started off about 3 years ago as a private fund, Cayman registered fund with mainly private LPs, family offices, fund of funds, other institutional investors who basically wanted to get exposure to the Polkadot ecosystem. I'm going to go more into why we're bullish on Polkadot, but that's just kind of the origin story where we came from.
Right.
And 3 years ago, launched the first fund, went really well, achieved around 3x return during a rather bearish time, to be honest, as of the beginning of this year. And then decided to launch a second fund, which we are currently in the process of raising. The Web3 Foundation, which is the foundation behind Polkadot, is going to be anchoring the fund. So, anchoring, they're acting as the initial LP, let's put it like that. And so that's obviously something we're very excited about because it means that we're going to continue to support the Polkadot ecosystem,
right,
and all the exciting projects that are building there.
Okay, so let's start talking about the firm. So at this point of time, can we know exactly what kind of amount your firm is managing at the point? And as you claimed that you have, at least 3x return of the capital that you deployed. So could you a little bit talk about exactly what kind of projects that were in your, in the portfolio that when you made the investment?
For sure, yeah. So in terms of size, Fund 1, as of the beginning of this year, was around 25 million. Fund 2, we're targeting to raise 100 million. That's not done yet. So it's not fully raised yet, but we're in the process of doing so. Right. And we're quite confident that we're going to get there, given the interest in the ecosystem and given the track record from the first fund.
Right.
In terms of your second question, what are kind of the projects that we're excited about or that we have been investing in? So I think in terms of, our best investment so far was actually Peaq Network. I don't know if you're familiar with them. They are a parachain on Polkadot, and they are a DePIN project, decentralized physical infrastructure networks. And a very exciting project in many ways, as they're leveraging off Polkadot technology. They're all about connecting different machines to each other and creating new economies that wouldn't really be possible before that. And so we supported them in getting a parachain slot, getting them onto Polkadot, and are very excited to have them there because it's one of those companies that do a lot of things in the background, maybe without you necessarily noticing it, right? Deploying Web3 technology. But that's also how you kind of reach the masses, right? There are people who think a lot about DeFi, NFTs, all these kind of crypto native, terms. What I'm personally more excited about is projects that deploy Web3 technology, but in a way that feels more native to the billions and billions of Web2 users.
Right.
So DePIN is kind of one of them. The other one that I would mention is gaming, right? Because, gaming is obviously one of the easiest inroads into Web3, and there are, billions of players around the world. We also made a recent investment, well, not that recent anymore, it was last year, but into Mythical Games, which is a Web3 gaming company building on Polkadot. And just now they're actually coming out with a new game called FIFA Rivals. So FIFA, like football, the football game. And the idea there is really like you have this amazing game that is fun to play, right? Like I personally grew up playing the old FIFA game, like FIFA 98 or so, but we just loved playing it, right? So it has a great gameplay. But then this thing has the additional benefit of leveraging blockchain technology to kind of come up with new game plays that wouldn't be possible otherwise. So for example, like in-game trading of virtual items, right? So for a football game, for example, you can trade players with other gamers.
It's kind of like
on the blockchain, right?
We have seen such shift in game trading. I mean, I was a CS player, so I know you could buy a skin of a gun and a different kind of skins and all that. So that has happened. So now now they're bringing that, and it is going to be directly operated on the backend would be on the Polkadot blockchain, right?
That's exactly right. Yeah, that's the amazing thing, right? So sometimes people say like, "Oh, Polkadot isn't as big or as well known as Ethereum," right? And that may or may not be true, but in my opinion, it's not even that important that everybody knows Polkadot, like the brand. I'm wearing it on my T-shirt because I love it, and we're investing in it. But I don't think it necessarily has to be like a user-facing brand, if you want. Much more important is that on the back end, right, like these applications are using it, and they are using it because they kind of start to realize that it's the most efficient blockchain infrastructure out there. It's incredibly scalable. It's incredibly secure. It's fast, and it's cheap, right? Yeah, so that's usually when you build like applications, that's what you want.
Yeah, but I just have a follow-up questions for you. When you say that it's cheap, it's relatively cheap to transact in the system. But I would like to ask about what about the new development? Because whenever a parachain, to deploy a parachain is relatively expensive in Polkadot. So if a new project, a project that could be succeed in the future, if they are planning to choose a blockchain, and if they have to deploy the parachain and deploy a certain capital, so why would they prefer Polkadot over any other trending chains that are being the go-to chain for the new dApps such as Solana, or we could say any L2s and Ethereum? So how are Polkadot's system is trying to resolve that issue? Or is there any additional incentive?
Yeah, that's a great question.
For deploying a parachain, is there any additional incentive that the Polkadot is providing for developers to deploy?
Yeah, that's a great question. So you're talking about parachains, right? Deploying parachains. Now, first of all, parachains are kind of like the old model. Right. So we moved away from the parachain model about half a year ago. And because you're right, it used to be a pretty expensive thing for projects to acquire a parachain slot, right? It would cost a lot of money and you're locked in for 2 years, right? Right. It had a lot of advantages, right? Because it just runs very stable. You have very predictable gas fees, right? You kind of know what you're signing up for, and it worked, right, without any hiccups. But it did, as you correctly say, constitute like a barrier to entry into the ecosystem. That's why about half a year ago, Polkadot transitioned to a new model called Agile Core Time. And that's kind of how now the computational resources are allocated in the ecosystem. Mm-hmm. And the great thing about Agile Core Time is, the first part of the word agile, right? So that means it scales in a very flexible way. Like if you just want to use it to test out an app and just like a single developer, you can do that, right? You buy some Core Time, it immediately works, right? It costs a few cents, right? Then you want to scale it for like 10 users, for 100 users, no problem. You're growing bigger, you want to scale it for 1,000 users, 1 million users, 1 billion users, right? The resources are there, right? That's the beautiful thing, right? So you have this ability to scale up and down depending on how popular the project becomes. And that's something truly amazing because you don't really have that in other ecosystems, in my opinion.
Right.
If you're thinking about, like, for example, Ethereum, L1, right? You always kind of are, like, there's always a situation where gas fees spike.
Yes,
and for some applications, that doesn't really matter, fair enough. But for other applications where you kind of need this very reliable, regular interaction with the blockchain, like a sudden spike in fees, for example, could be devastating and really ruin the business model.
Yes, I mean, we totally agree with that. But, in the recent development, people are more preferring, deploying their own L2 on top of Ethereum. If they are, they want to bank on a multiple transactions, such as, we could see.
So first of all, I want to say that, the L2s on Ethereum and the roll-ups on Polkadot are kind of the same technology, right? The difference is that Polkadot was there much earlier, and Ethereum kind of did the L2s more as a quick bug fix because the main chain couldn't handle all the transactions anymore. Right. So in a way, like, it's Ethereum trying to catch up with what Polkadot has already been doing for a long time. But the actual difference is more that, in Ethereum, you still have, like, I don't think you have really, like, they haven't really fully figured out, like, the incentives between the L1 and the L2. Okay, what does it mean? There is always a bit of a dispute here between L1 and L2 because it's all about, like, who pays the fees, right?
Yeah, exactly.
And you can really make a pretty good argument now that at the moment, all these L2s on Ethereum are essentially free riders. They're taking advantage of the crypto economic security that Ethereum provides, but without actually paying the fees on the main chain. And that is a problem, right? That goes well for a while, but it cannot go well in the long term, right? Because on the one hand side, Ethereum wants these L2s because that's the only way they can scale. On the other hand, they don't really pay fees. They're kind of free riding here on Ethereum's security, and that's not a sustainable business model. The Ethereum community has been waking up to that. There were all these, like, different disputes between different, leadership, like, edges of leadership or, like, factions of leadership within the community. And I think it's still, like, an unresolved problem, right?
I would like to.
That's why, Ethereum has been struggling so much recently.
Yes, certainly. I mean, I would like to add up, a question that I have just came up to me. That Ethereum doesn't really have the best revenue model at the present state. I mean, a lot of other dApps on top of Ethereum are generating more revenue. Also, other chains like Tron is just generating a lot of revenue by just shifting stablecoins. I mean, the core purpose of the chain presently is just to move stablecoins, but still, they are generating an excellent revenue and, topping the revenue game. And in the lately, the discussion over the crypto community that we see is surrounded to the revenue model of a chain. A lot of prominent crypto, speakers believe that revenue does matter when it comes to a chain future and sustainability of the developer and, people providing their work and time to the chain. So when that comes into the play, what solution Polkadot brings? I mean, I'm not talking about incentivizing them with the native token, but specifically about the revenue that the volume or the transactions generate and is getting rewarded by to either the developer or the other community. I mean, Uniswap has recently just announced, and they are making decent revenue after charging transactions that happens on top of Uniswap. So does Polkadot have any such a module that people would be, people would be admiring that, yeah, Polkadot does stand in the revenue game, or for the people developing on top of it?
Yeah, I mean, you mentioned a few things here. So stable coins, I fully agree that is obviously like a very important use case, right? It's a pretty simple use case, to be honest, but it's obviously like one that people actually do use for payments, and the benefits are pretty obvious. So there are some really good integrations. For example, Nova Wallet, which is one of the main Polkadot wallets, right? It had like this super easy interface where you can just like send stable coins, all the standard ones, obviously, USDC, USDT, natively on Polkadot at like fractions of a cent, right? And it's like instant, and it's much, one of the big players in the stablecoin space is Tron at the moment, right? With TRX, right? And actually their transactions per transaction are like order of magnitude more expensive than on Polkadot.
Exactly.
Right?
I mean,
so just,
at the present time,
they're kind of a leader at the moment.
It is, even Ethereum is much cheaper.
That's just because they're a legacy player.
Yeah, Ethereum is much cheaper at the present moment than transacting a stable coin on Tron. So that's quite...
Yeah, which is kind of crazy, right? So I'm asking myself, like, who the hell is like still using Tron? Because it's a pretty shitty protocol in the sense that it's highly centralized, right?
Exactly.
It's not decentralized at all, and it's expensive. So, like, why are people using it if there's so much better alternatives out there? Polkadot obviously is like a much better alternative, and it goes really fast. It's actually secure. It's actually decentralized, and also one kind of it's like a small but actually quite an important part is. You can, on Nova Wallet, you can use USDT or USDC as the fee-paying asset, right? So oftentimes with other wallets, you kind of need ETH. You need a little bit of ETH plus the stable coins to send it if you have a new wallet, right?
Right.
Which is always a pain in the ass for people. But on Polkadot, you can just natively use, whichever asset you want to send as the fee-paying currency. And yes, in the background, it's automatically converted into DOT, right? Like a tiny fraction of the amount to cover the fees. But that's actually, in terms of usability, like a great benefit. So that's on stable coins. But you also asked a few other questions. Remind me again what the other part of your question.
It was about the protocol revenue, because lately we are seeing a huge shift towards the narratives. I mean, the narrative was to, user basis, but right now the users are there. I mean, the users are there in Solana, users are there in Ethereum, and there are users in L2 if you bring a quality product. And even if you don't have an L2, if we take an example about Hyperlink, they have launched their own product, and, they are working with Ethereum, and they have got excellent users and liquidity there. But at the end of the day, the revenue module for the protocol, developer or the deployer, it matters a lot. So when it comes to the revenue game, what steps Polkadot has taken, or correct me if I'm wrong, but what exactly is the revenue module for the developer on Polkadot at this time?
Well, about developers, that obviously, like if you talk about the apps that are building on Polkadot, I mean, there are many different revenue models, obviously, right? It really depends what kind of business you're talking about. If you're talking about a gaming project, a DePIN project, like a government services project, like an RWA project, they all have very different revenue models, right?
Right.
Maybe your question is more about like what's the revenue model for Polkadot itself, right?
Yes.
And this is, for that, there is like a pretty easy answer. And it is selling crypto economic security, right? That's kind of it, right? You have like with Polkadot, with the relay chain, you have these incredibly strong crypto economic proofs, right? That allow any kind of application really to execute securely and in a way that people know what's going to come out of it, and that probably has never been hacked in the past, right? For that, obviously, you have to pay, right? And that payment is in DOT, and that is kind of why the DOT token has a value, and why we believe it's going to increase in price over time. One comparison for like maybe some less technically like listeners of yours is the comparison with AWS credits, right? I think I often like to think of Polkadot as the AWS of Web3, right? So it's a bit like a network on which anything and everything can run. So if you think, what did AWS really do, right? They didn't really invent cloud computing, but they just made it much, much easier, much more scalable, much more fast, much more cheap, right? And by virtue of doing that, they enabled all kinds of other new business models. For example, the ones of, Airbnb, Uber, Netflix, right? These are all AWS companies that otherwise wouldn't be able to scale so fast if they had to set up all their infrastructure on their own. 100%. They're just paying AWS in credits, right? These are these AWS credits that kind of the application pays, like first buys off the market and pays. And then whatever they do, right? Netflix has a subscription model for watching movies, right? That's how they get money in. And it's a bit similar with Polkadot, right? It's kind of a network on which you can run all kinds of different applications. You pay for the core time, or the block space is kind of what maybe more people are familiar with, but it's kind of the same term. And then you get like the secure, fast execution. You pay for it, but it's pretty cheap. It's very secure. And so that's why more and more developers are actually coming to Polkadot.
That's, we have been seeing this narrative being widely spoken in the community. We have seen recently, Solana has been quoting widely transaction, TPS like never before. They are claiming that they're scaling and then they would be doing 100,000 TPS, while the reality is just, 3,000 to 4,000 TPS. But some other protocols are also aligning to build that level of infrastructure along with the, any blockchain. We could see that with 00 that they are building the, physical infrastructure that any blockchain could use and scale that to an unimaginable, TPS. So when we talk about Polkadot, I would like to know how, what numbers do we see in terms of TPS? If we want to inform our readers, how much TPS does Polkadot actually delivers or is capable of at this time?
Yeah. So TPS are kind of like a metric that everyone likes to use. It's not necessarily the best metric for like a number of reasons, but if everyone likes to talk about it, let's talk about it.
Yeah,
so we don't have a problem with it.
That's the reason.
The answer is 100. Yeah, the answer is 143,000, which has been recently measured in a live in production network. So this is not like a hypothetically answer. 143,000 is not something that, maybe we can achieve that at some point or something. It's actually been measured, right? Wow. So this was a couple of months ago. There was like Polkadot deliberately did a stress test, right? Like stress testing the live in production network to basically spam the chain with like actual transactions that were then recorded on the chain, just to measure like how many transactions you can squeeze in. And like sort of the peak was 143,000. That's already like a number much higher than Solana. And the funny thing is it's still not really like maxing out the actual capabilities, because that's on a single core. The future of Polkadot with JAM, which I can go into more detail later, is going to be like a multi-core network.
In a bit.
Right. Yeah. So we can talk more about that. But in terms of TPS, I think, Polkadot is absolutely delivering. And, we have kind of we don't have to shy away from these kind of comparisons anymore. In the past, maybe there was a bit of something that held us back, but, by now the network is stable, it's running, it's, high throughput, and it's actually decentralized. And because, you mentioned Solana before, Solana kind of always, people somehow have the impression that Solana is so incredibly fast, right? That it has such a high TPS speed. It's actually an incorrect narrative, right? Maybe it was true when they just started, right? Compared to Ethereum, for example, they had a higher TPS, but nowadays that's not true anymore. They're not a particularly fast, blockchain anymore by comparison. And at the same time, they're still very bulky, meaning that very few people are actually running validators. Because
I agree.
The validators have extremely high hardware requirements that very few people can afford it. Yes. And as a result of that, it's a highly centralized ecosystem. We always knew that Solana is highly centralized, but now we also have to prove.
There has been time where the Solana chain has been halted. Not something that we expect from a blockchain, but yeah, that did happen. But moreover, I would like to, this is not a question, but more of a discussion, I would say, that a lot of users that we have, seen on Solana, that is because it is very convenient for anyone to just download the app, Phantom, or anyone, put some Solana there, and then they can do the meme coin stuff that people are, crazy about. So, that is the major reason behind the huge numbers we see as a user base. But in terms of a lot of people, they have no idea about the basic blockchain ethics that are, the reason why we shifted to a blockchain earlier when we did. So that's a reason why a lot of people see Solana. And since, everyone have this certain, memory that when they onboarded it. So, for example, most of the people are onboarded on Bitcoin at the earlier. Some of them were Ethereum. Depends on which year you came into. So the people who has been onboarded after, I would say 21, they have majorly onboarded on Solana. And they have not even tried, I think, using Ethereum. I'm a pro Ethereum, Bitcoin kind of guy. But that's a reality. So in terms of using the Polkadot system, I personally tried parity earlier when they, parity signer then when they launched earlier. But any application that you see that a mass number of people would onboard from on Polkadot, and that would actually serve the purpose for the major people, who wants to onboard it. They're obviously not interested in the
That's a great question. That's a great question. So I understand what you're saying. So look, first of all, about Solana, the meme coins, right?
Yeah.
So yes, you're right. All the meme coin traders are going to Solana because that's where all the meme coins are. And because it's kind of tangible and people think it's kind of funny and, they think they can get rich quickly, everyone is moving to Solana. Now, on the one hand side, you can say, that's great onboarding strategy because it's obviously
it is.
It's like a casino, right? And people are excited about it. They go there, they trade, they gamble, they think the memes are funny, right? Truth is, a lot of people are also losing a lot of money in meme coins on Solana. 100%. So it's actually it's also quite horrible in many ways because people get there all excited and then, they lose their last shirt and then they go oh, okay, fuck that. Maybe that wasn't really the best idea. So yes, from a ecosystem development perspective, you can say maybe it's smart, right? Maybe it is because it has a lot of hype, a lot of traction here, but it's not the metric that we want to compete on, right? So Polkadot does not really position itself as the next kind of meme coin a universe or something, or ecosystem. I mean, of course, like all the things from a purely technical perspective, we can do it, right? Yeah. All the meme coin launches you could do on Polkadot, like the same pump.fun things, there are like equivalents on Polkadot, but that's not really what we're trying to compete on. I'm much more interested in some like real world use cases. Right. And yes, it maybe takes longer, maybe it is a bit slower to onboard users there, get them familiar with like some slightly more complicated concepts. Mm-hmm. But, the crypto market always goes through phases. And it is true that, over this cycle, last cycle, this cycle, arguably, meme coins were kind of the thing that everyone is kind of talking about and excited about. Yeah. I frankly speaking, don't think it's going to be a thing in the next cycle, right?
Exactly.
I think in the next cycle, people kind of realize that this was just like a bit of a stupid phase. And there are some other things out there. So we're not even trying to compete with Solana on the meme coin space, but just, focus more on things that actually generate some value for the users. And then, lead in that space.
But see, if we see about the narrative point of view, while onboarding users from a prominent chain to another chain, there has the narrative play a key roles here. So if we go back to 2018, in 2017-18, I would say that Ethereum itself doesn't really had that many users or the capital before DeFi actually was introduced. And even in the DeFi, people were not onboarding for the Uniswap. They were onboarding because of the yield farming, as far as I remember. I mean, I shifted from Bitcoin to Ethereum because of the yield farming thing. And that made me stick on Ethereum since then, because I mean, even if you not, you knew that this is just going to die, but people were deploying hundreds of millions on a newly yield farming. They were farming like yam or any kind of fruits that they they launch. So that was the case for 2018 to onboard native Bitcoin users to a lot of people wrapped their Bitcoin at that time. And ever since then, they when they once you wrap the Bitcoin, there is not a lot of going back to Bitcoin, because you could stake it, you could earn, and you could just get money from Aave and borrow money. There's a lot of use cases that you do. And after that, if we move forward to the NFT era, people came to Ethereum because of the NFT, not necessarily because they wanted to use Ethereum. And that narrative has just changed it in a most horrible or crazy way that we are seeing right now with the meme coin stuff on Solana. So in terms of this narrative, you're saying that Polkadot's narrative is the real world use cases, and then you guys wanna focus more on the real world use cases and bring users from that way. I mean, if you do execute that would be long lasting than any of the other narratives, because narrative dies very soon in crypto.
Yeah. No, I think that's a great question. And I think you summarized it very well, right? The evolution of crypto, right? First was Bitcoin, then Ethereum.
That's like Ethereum. That's like my story.
DeFi, the NFTs, and Solana, and then like the meme coins, right? So that's roughly like the evolution. So, but you see like things change, right? They're not static. And there are kind of new things kind of coming all the time. And you also say correctly that we like to focus on the real world, right? Don't want to sound boring here, but that's just like a much bigger market, right?
Right, yeah.
Because
100%.
I still very strongly have this thesis that in the future, like every asset, so every stock, every bond, every commodity, every invoice, every piece of art, every vehicle, you name it, anything, will be tokenized on a blockchain in one way or another, right? I mean, of course, these are all very different markets, and there are like different regulations that apply to all of them, right? Real estate in Brazil is very different to the Japanese stock market, right? But in theory, both of them can be tokenized, right, through the right kind of legislative framework, and then can be run on a blockchain. And our opinion is that Polkadot is the best blockchain that enables all of them, right, via the various applications that build on top of Polkadot. And then we're talking about like a multi-trillion-dollar market, right? So it's a very, very different,
it's a very huge
kind of ball game. And that's also kind of what we're excited about, right? So this idea that everything will be tokenized, that's kind of one idea. And then also the other thing that I think is quite important to say is, it goes beyond just assets, right? Assets is one thing that is kind of interesting, but there are other elements that are also very, important. Like one revolves around this whole question of identity, right?
Yes.
And, how do you prove that you're an individual, right? And that you have the right to do certain things,
right.
Without revealing kind of like a whole data dump about yourself, right?
Yeah.
So in that space, Polkadot is also very much in a leading space. We've got some really, really cool applications there. Much of it is still in a more kind of experimental stage, but these are kind of things that will be rolled out over the next, couple of years. Mm-hmm. We're already seeing it now, but it's pretty obvious if you think about it, right? That, for example, if you want to, sign up to the exchange, you have to upload your passport photo, right? Mm-hmm. Or your passport copy. I mean, that's actually pretty ridiculous because it just creates these massive data dumps that, then oftentimes get hacked. Why is that, right? How can you sort of prove your identity without being completely transparent, right? So having these trade-offs between Sybil resistance. So that's kind of the idea that, on the internet, you can set up as many accounts as you want, right, controlled by one person, right? So that's kind of usually the issue why you need some sort of a KYC and a completely transparent surveillance kind of state where, the government or, whoever the KYC provider is, knows kind of everything about you, even things that they don't need to know, right? So these are kind of the two extremes. And I think Polkadot is making some incredibly smart moves in striking a balance between these two.
That's, that's really great vision, I would say, with Polkadot. But I mean, we have been seeing this shift in other chains too, that they are trying to bring the stock market or some rare commodity like uranium, if you have heard about it. Uranium, they're trying to, they are trying to bring it on Tezos L2. So at the end of the day, you would have to do a KYC there. But the real question here is that a traditional person who already is, trading stocks or commodities in the traditional market, why would he onboard on the blockchain? I mean, what motivates them? That's the real question here. Because
yeah, I mean, for the stock market, the answer is it depends on jurisdictions. I think that's a very big part of the answer. I mean, yes, in the US or in Europe or in some part, it's very easy to own stocks, right? In other parts of the world, it's very difficult, right?
Yeah,
and it's very unfortunate because, if you live somewhere in sub-Saharan Africa, for example, probably it's next to impossible for you to own a part of the SP 500. And you kind of caught up in this poverty trap because, okay, you're poor to start with, but then it's also almost impossible to have an upside in this, clearly very successful wealth generation mechanism, namely the American stock market or other stock markets of the world. So I guess that's part of the answer to this question. But then there are, of course, also other asset classes that are more difficult to access for people also living in the West. So, I would say real estate, right? Many people coming out of college or whatever, like owning a home or owning a flat is just, kind of almost impossible for them, because, property prices have been rising crazily. So they kind of gave up on any hopes of owning like, their own flat, which, is a problem in itself. But one way to think about it is like, okay, well, you still want to be able to have people participate in the growth of this market. So that's where this whole like fractional ownership comes into place, right?
Yeah,
you can own like 1/10, 100th, 1,000th of an apartment in Paris, whatever, right? And you just buy it on your wallet, on your, whatever, whichever interface you use.
Mm-hmm.
And then you own like, a tiny fraction in like an apartment. And if the value of this increases, it's a very stable return. It's not like a crazily speculative NFT or a meme coin.
Yeah,
but
it doesn't
it's
go
an
down.
actual like whatever apartment in Paris, let's say. And it like, rises in price over time. And so why not make this accessible to like millions and billions of people?
Yeah, but if we are to fractionize the real estate has to be registered under a certain entity or a name to respective authority. And then we could fractionize that to 100 or 1,000 people. So this 100 or 1,000 people are obviously trusting an entity or a person who has deployed that contract on anywhere. So that would just be
exactly.
About decentralization.
Yeah, so that's why it's good to think about this like in a modular way, right? Polkadot had like sort of, that's why I was saying the AWS of Web3, right?
Mm-hmm.
So you have this like layer at the bottom, which provides the security and the computational resources. And then you have like the different companies or projects building on top of it, right? The great thing is they're interoperable with each other. And let's say one company does, as I said, like real estate in Brazil, okay? And it's run by a bunch of Brazilian guys, and they are lawyers by training, and they know what they're doing. They know how the real estate market works in Brazil. They have all the licenses by the local government, yada, 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 right? So that's kind of one of them, right? And then there's another one that, let's say, does, tokenization of gold or uranium, or you name it, doesn't matter what, anything, right? And they're sitting in the Netherlands or whatever, it doesn't matter. The beautiful things about each of them is in its own regulatory framework, right? And that's beautiful, right? Because we want these things to be properly regulated.
Yes.
We want them to apply to the local laws that are applicable. But at the same time, we want them to be able to interoperate with each other. And that's what Polkadot enables, right? So you can trade them natively on Polkadot-based DEXs, and you can obviously trade them in and out into other ecosystems as well. But Polkadot is what provides the security here, and like the platform on top of which you can build all these kind of exciting applications.
Right. So I like to understand it from my perspective. So one chain, one parachain or a relay chain is completely controlled by a government entity, and then they are issuing a certain level of a certain level of license or approval to other chain, which is fractionizing the asset. And then people would actually trust them because it is approved by a chain that is centrally, controlled by a government entity. I think that that could work. I mean, is it how it's going? I mean, correct me if I'm wrong.
Yeah. Wait, let me clarify a few things. So like a parachain or something would not be controlled by government. Like that's not the idea, not at all, actually.
Okay.
So the idea is that the relay chain and then like the projects building on top of it, they are immutable, right? They just execute based on the logic of the underlying protocol.
Mm-hmm.
And no government, no single entity, no single company has the ability to change anything about how the code is executed, right? So that's on the execution layer. That's kind of very important. And I bring this up because yet there are some people or some chains who kind of try to take a different approach, right? Who say like, oh, well, the validators are all run by like a government or by a known company. And so, for example, ICP, I think they're kind of going this way, right? This consortium chain where you know who's running the validators. It's a very, very different kind of business model from Polkadot. There, the idea is like, oh yeah, if something goes totally wrong, you can always go back to them and say like, oh, you have to do a rollback, right? And that's not what we're trying to do here. Okay. Like the idea with Polkadot is that the chain execution, the logic of this chain execution is immutable and permissionless. Right. Okay, so that's very important. But I think I kind of know where you were going with this, because within this kind of secure execution environment, you can write smart contracts, right, that execute in a way that adheres to local laws and regulations. Right. Right. So, for example, right, I go back to whatever, let's say real estate in Brazil. Okay. I don't know. So if there is like a specific requirement, and I'm just making this up now, right? Like it's a stupid example. If there's a specific requirement that if you want to buy this real estate, then you have to be, I don't know, a resident of that state. Okay. If you're not a resident, you're not allowed to buy it. Right. Okay? Let's say that's the actual law of the land, right? Yeah. This is a law that then in this execution environment, you can enforce, right? As the developer, you just program it in that way. Check first, is this guy a resident of this state, right? And these are the proofs that are acceptable. And only if he is, then he can actually purchase that. And you can do this with like any kind of logic that you want, right? And that's how you kind of build a legally compliant system on a permissionless network. Right.
So I understand your point. Now I wanted to talk a little bit about the Polkadot governance. So since Polkadot is using an NPoS, nominated proof of stake. So could you provide me some key differences between a nominated proof of stake system and a traditional proof of stake system, or a proof of history system like the Solana is being used, or any other governance system, or how does NPoS differentiate itself from other?
Right. I think you're kind of mixing together governance system and consensus algorithm.
Yeah, I'm sorry. Yeah,
these are kind of two different things.
I meant to say consensus. But
consensus algorithm, you're right that we're using like a nominated proof of stake. The main advantage here vis-a-vis the proof of stake is that you have higher utilization rates, right? Okay. That on Ethereum, like many of the validators, they're just sitting there and not really doing anything, right? They have to be like sort of, they have to have a lot of spare capacity that if there is a spike, right? And, if they win like a block that they need to validate, then they have to have all these computational resources, but then they're sitting on zero again for kind of a long time, or like a kind of very like base capacity. And that's ultimately a pretty inefficient mechanism. Nominated proof of stake kind of solves that and basically ensures that hardware is always like used at more like consistent rate, while still maintaining a very high degree of decentralization and distribution over the network. But I can also answer your other question about governance, because that's kind of a different topic, and it's also a very interesting one on Polkadot, because I really want to
governance. But I'd love to hear it from you.
Because governance on Polkadot is very interesting. I would argue that Polkadot is the world's largest DAO and the most active DAO, right? Because the way it works is that basically all decision in Polkadot, like literally anything that's happening there, is being voted on chain by all the token holders, right?
Right.
So that's not happening in Ethereum, in Solana, right? Like not at all. That's very, very unique to Polkadot. And it's its own like microcosm, right? Of different players who have all their own ideas, how to do things, right? For example, how to spend resources, right? So we have this treasury with a lot of money in it. Mm-hmm. And the way it works is, in theory, like anyone can, come up with a proposal, what the money should be spent on. So, for example, let's say I want to build, a music app. Okay, a music app on Polkadot. So I can say, I've got this great idea for a music app. I go to the treasury, write the proposal on how to do this music app and why the treasury should fund it, should pay for it, for the development costs, right? And then it actually gets put on chain, and then everybody who holds one dot or more can vote on it, right? They can, on their interface, say, this is a good idea. Polkadot should build that because it's a great app and it's going to benefit Polkadot. Or they can say, no, we shouldn't pay for that because it's a waste of money, right? So there is some actual decentralized governance, and you have so many people actively engaged in that. And if you haven't really seen it, then I recommend anyone to check it out. The best way to look at it is Subsquare. So if you go to subsquare.io, you see basically all the proposals that are currently being submitted and how the voting is going. And it's literally like a democracy in live action, right? I could talk forever about governance, but I'll leave it here.
That's a great answer, and I will most certainly check it out to provide a in-depth review to my audience. Now, I have a few questions for you. So first of all, I wanted to talk to you about a jam that is introduced to Polkadot. I would personally like to understand it from your prospect, what exactly it is, how it benefits the Polkadot ecosystem, and what future are you expecting from this with this jam? So can you please enlighten us?
Yeah. Okay, so JAM stands for Join Accumulate Machine. It's an upgrade to Polkadot. So it's not a new blockchain, it's an upgrade, a technical upgrade to Polkadot that was introduced by Gavin Wood about a year ago, a bit over a year ago, as a gray paper with formalized specifications that is currently in development, right? So it's not live yet, it's currently in development. It's a major upgrade. It's arguably the biggest upgrade that Polkadot ever underwent. And what really is it? It's the easiest way to think about it is it's a scaling mechanism, right? It makes Polkadot more scalable by orders of magnitude, right? So not just by a little bit, by a few percent here and there, but it's going far beyond in terms of scaling to anything else we've seen before in the space, while still maintaining decentralization and security, right? So it's kind of the new approach to the blockchain trilemma, if you want. How does it achieve that? It moves Polkadot into a multi-core system, because currently Polkadot, same as Ethereum, Solana, they're all kind of single core networks. A core is something that can be kind of thought of like a CPU,
right?
So if you have a computer at home, then it has one CPU, that does all the computation for the computer, and you can do whatever you want on your computer, but it's still just one CPU. Now, once you start linking up multiple CPUs through the internet, then you can get to servers, right? The whole cloud computation thing, in the Web2 space. I'm talking about the Web2 space now, right? Yeah. Then you had servers, server farms, right? Cloud computation. So it's kind of moving in that direction here. The idea that you don't have one central processing unit, but many of them, and they are able to maintain coherence between each other. Coherence is kind of the magical word here because, of course, it's easy to have a bunch of computers that all do their own thing, right? And they just execute, and then you say, okay, instead of one core, I have 1,000, and now I'm 1,000 times as fast. Yes, well, kind of, but what if, the CPU 1 does one thing that kind of influences like what the other one is supposed to do, right? Like, do they actually talk to each other? Are they able to communicate to each other? In the past, that was not really the case, right? And with the JAM upgrade, that's for the first time something that is being enabled, right? To move to a multi-core environment. And that's super exciting, of course, for us, because this is like the best way to scale, right? While still like maintaining decentralization and security and coherence, right? Across the system. And we can already see it in action, right? I give you one, kind of funny example that, I don't know, it's an interesting illustration, right? Like how powerful this is, okay? Right. So Gavin Wood, right, the founder of Polkadot, he recently did a demo in Shanghai where he was running the old computer game Doom on Polkadot JAM, okay? So what does that actually mean? Currently, transactions on a blockchain are, sending, for example, one Bitcoin from A to B and back, right? Or on, Ethereum to execute like a pretty simple smart contract, right? When I say he was running the game Doom on the blockchain, what it means is that the entire game logic and the graphics, that's the important part here. Right. The graphics of this game are executed on the blockchain, so that if you have a computer screen and all the pixels, right, that it spits out like the color of the pixel, right, correctly and fast enough so that you can like play a game like that. So that is, in my opinion, it's mind blowing, because it's just like,
I mean, we have not seen anything like this, with any other.
We have not seen anything like that. And people go like, oh, whatever. I mean, I played Doom like 20 years ago, which is true, right? That's the point, right? Of course, like a computer from 20 years ago was able to play this game. That's kind of the whole point, right? Yeah. But to do this on a blockchain is absolutely unprecedented. And like all the other competitors, they are like miles away from even attempting something like that.
I mean, if we could actually bring an older game to a blockchain, do we see any future whatsoever of a social media being, shifted on a blockchain? I'm more, optimized towards that, because social media is a great part of our life nowadays, and then it is highly centralized, and we haven't seen much, optimism towards that. I mean, this is a personal question to you, Max. So if you could give me your thoughts on it, do you think it could be a reality?
Well, I mean, because you had kind of this segue, right, from like, I talked about the game Doom to, kind of social fi and social gaming and so on. So just to be clear, to like not confuse people here, like the idea is not really to play all the video games on the blockchain, right? That's not really the plan, because what's the point of it, right? There's no benefit of it. Like if you want to play a game, like the graphics, right? The graphics, of course, are always going to be better to execute locally on your computer, your mobile phone. Like this is going to be like a billion times faster, right? So we're not like this. When I talked about like Doom before, that's really like just like a stupid way to show the force, the power of it, but it's kind of a completely pointless exercise, right? It's not really like the way. It's not really that we think that all games that anyone plays should actually be executed on the blockchain, because it gives like literally no benefits, right? So, but it just shows the capabilities, and those capabilities can be used for other things, right? So that's kind of then the intro about gaming and like social gaming, and so here this is it's also part of our whole thesis and narrative around the gaming space. And it also went through a couple of different evolutions. I guess we all remember, for Axie Infinity, right, which was kind of the one game that everyone talked about.
Yeah.
This play to earn, right? And then you had like a situation where people, they didn't really like enjoy the game, but they played it because it could make them money.
Yeah,
right?
Exactly.
And this money was primarily like VC money. Like VCs poured money into it. And then you play it, and if you're good, you get some actual cash out of it. So it was it's kind of a cool way to like attract some attention for a while, but it was an unsustainable business model, right? That's it. Like as soon as the VC money was eaten up, like nobody was playing these games anymore, and they haven't really figured out like a way to like maintain that. The reason for that is because the games themselves were not particularly fun to play. Right? If you ever played Axis, it's like a rather actually annoying game, and you don't really get like much satisfaction out of it, right?
It's not great.
So it was really more like a job, and it's kind of cool that they did it for a while, but it was pretty obvious to me from the beginning that this is not a sustainable pathway that they're going down, and that has been proven true because it disappeared, right? So now I think the next step in the evolution is that games have to be fun to play, right? Otherwise, it's kind of not a game, right? It has to be fun. It has to be engaging. And then if people like to play it, right, and they're kind of hooked to their screens, then you can kind of build in these additional like kind of crypto economic logics here. You can, for example, put a trading aspect in it, right? Many games you kind of, whatever, you play something and then you get like a digital sword, right? Let's say. And then you own the sword, right? You own the sword on the blockchain. That's really cool. Via the blockchain, you can sell it to somebody else, or you can trade it against like whatever, like a different item, right? So, and then combining these two things together, I think, is the direction that the space is going to evolve.
Yes, but see, lately we haven't seen that. I mean, most of the games that has launched, it is just a way to attract the users by giving them some small incentives that doesn't hold any value in the future. And we have seen a lot of games like that. Specifically, when the Tron launched its blockchain, there were a lot of games there, and it died really quickly. Earlier, they would launch a game, it would last for a month, then it would last for a week, and then it comes to the day, and then people stop deploying games there. But at this time, I think this would actually make sense in the future if you could actually own something, and the game itself is fun to play, and it is running on the local, computer using video graphics, and the only technology that is being used on the blockchain is the accessories that people care to own. Other than that, I don't think we should deploy an entire game on a blockchain, because it would, result in a horrible gameplay. But anyway, we'll move to the...
absolutely, and let me go back to, the company that I mentioned earlier, Mythical Games. So this is one of our portfolio companies.
Sure.
The CEO is a gentleman called John Linden, right? And he is, as OG as it gets into the gaming space. So he was one of the core developers of Call of Duty.
Wow.
One of my favorite games, like growing up, right? So he kind of built that game. So he knows something about like gameplay.
Right.
And he now moved into the Web3 space and started building, Web3 games, right? And so FIFA Rivals is one of them. They have another one, NFL Rivals, right? So these are like big brand, like AAA games, right? Where we can really reach like hundreds of millions, billions of players.
Right.
That's amazing, right? That's a very, very different approach than like some kind of, game that is designed only for the Web3 space and, isn't particularly fun to play, right? we want to leverage off the decades of computer game developing experience that the industry has jointly already accumulated.
Right. So, as I would like to little bit discuss about your company, coming back to the beginning of the conversation. You said that your firm is looking to have a 100 billion capital. So could you, give me a little bit brief about how you're planning to execute that, and what projects would you be investing when you would be getting that funding?
Right. I mean, these are different questions, right? Like one is capital raising, the other one is capital deployment.
Yeah.
Let's talk about the capital raising part. So what I find quite interesting is that, we work a lot with like institutional investors and family offices. So family offices, I'm based in Hong Kong, for example. So I kind of know like the Hong Kong and the Asian family offices quite well. So, it's quite interesting because oftentimes you have a situation where, wealth is really like generated over generations, right?
Right.
And maybe like the grandfather started off with like shipping, and then like the father was like, okay, what are like kind of the interesting industries of the day? And then he went into manufacturing or into real estate, right? And now it's kind of the third generation taking over, and they think about it from a very strategic perspective, right? And they go like, well, so the big items of the future are going to be AI, right? Everyone talks about AI, biotech. I hear that all the time as well, right? And then obviously like crypto and Web3, right? And then these guys are usually, not always, but usually humble enough to say, we're not experts in this field, right?
Yeah.
The same way as I'm not an expert in, let's say, biotech, right?
Yeah, exactly. Same.
If we want to invest in the space, let's go with like some, funds that know what they're doing, right? And sometimes you have like a situation where they just want to have some exposure to kind of crypto overall, right? And then maybe, they go into some of the kind of, I don't know, bigger funds or the more generic funds, or like the fund that just tracks like the top 10 coins or top 100 coins or something like that, right? But what I actually really find interesting is that many of these investors, they go like, well, we looked into the space, right? And there are different strategies that kind of we believe make sense. Who are the best managers to execute on this strategy, right? And obviously in crypto, there are many ways to make money, right? You can do DeFi, you can do like arbitrage, you can do long short, you can do means reversion, right? They're all kind of like strategies that in themselves kind of make sense, right? But if you do them, you want to be good.
Yeah,
right?
You want to be expert.
You want to be the
lose
best
more than you
it,
learn.
Right. And from our fund, and also from the VC perspective, right, there are some VC funds that say, oh, well, we do a bit of everything, right? We invest wherever there's opportunity. We do Solana, we do like Ethereum, we do like new layer ones and so on. And yes, I mean, it's a good sales pitch, but I think the reality is it's really hard to be an expert in everything.
Yeah.
Right?
100%.
In the crypto space nowadays. So that's why we said at Harbour Industrial Capital, we just focus on Polkadot, right? We're just going to be the best fund for Polkadot, right? We know all the projects that are building there. We get into the projects very early on, right? We're doing like the pre-seed rounds. Sometimes we're investing when there's literally just one founder without any team because we like his vision. So we're very early. We really, really know the market, the ecosystem. We know what things are missing and what kind of startups will be successful. So we're a very, very focused, very targeted capital allocator on the Polkadot ecosystem. Everything else, right? If something is happening in Solana, it's like, okay, we don't touch it. We're not interested, right? So I think focus and specialization is just incredibly important. And from the perspective of an LP, of a capital allocator, they can still do both. That's the great thing, right?
Yeah.
Especially if they're, rather on the wealthy side and they have like, a few $100 million to allocate. And, many of our LPs are in that size. Not all of them, of course. We have smaller ones as well, but, many of them are pretty significant family offices, then they go like, okay, well, we're going to invest, a few million in this Solana focused thing. We do a few million in like Bitcoin mining, right? Yeah. Which is also quite interesting. We do a few million in like a arbitrage strategy. And, we like the Polkadot ecosystem. We believe there will be upside. So we move a few million into Harbour Industrial Capital because they are the best capital allocator in this ecosystem.
Right.
And that's kind of how we get capital into our fund.
I mean, that's a great strategy that, do what you are best into rather than focusing on what people are doing. That certainly would make you money and certainly would not lose a lot of money. That's a great strategy for that. And other than that, I would like to ask you, in terms of the projects, like, the question that I asked you earlier, what projects would you be deploying it if you get the money? Let's say you get the money raised in this week or month. Which projects would you be eyeing it to deploy? Any you would like to name or discuss if you want to, not if it's confidential, it's okay.
Sure. And also, as a quick side note, I have to wrap up pretty soon after this question because I have to run off to another meeting afterwards.
Right.
We're already going here over an hour, but I'll still answer your question. So, look, I mean, there are different verticals that we're excited about. And I guess, I already talked about gaming for quite a while, so, I'll leave that aside. DePIN, I think, is still a massive, industry where we're only starting to scratch the surface, right? This idea of like networks of machines and networks of data, right? There's this saying where like data is the new oil, right?
Yeah.
You can do so much with data if you know how to analyze it. Right. There's some great projects in kind of the data analytics using blockchain infrastructure in that space, right? I give you one simple example, right? So, for example, like self-driving cars, right? Or actually not even self-driving, like any car really. If it drives around the road, like it actually generates quite a lot of data, right? So, for example, camera data, like data about weather, data about the traffic conditions, about road conditions, about like which shopping center is busy at what time of day, right? So all this data in aggregate is actually very valuable, right, for certain people,
right?
For example, for insurance companies, it can be for retailers, it can be very valuable, right? For urban planning, for road companies, for shipping companies, right? This data can be very valuable. Yes. Now, one single source of data is kind of pointless, but if you have hundreds of thousands of data inputs, that's very valuable, right? Now, this data belongs to the owner of the car, right? And there are some applications that allow the user to sell this data, just like click opt in, and then it gets kind of fed into the cloud. It's completely anonymized, so it's not like linked to your personal information, right? But it's kind of provided to data brokers, and the user, which in that case is the owner of the car, gets a share of the revenue, right?
Right.
So you're actually paying users for the data that they're generating anyways. So, that's kind of like a DePIN application that I like, right? Because it's not about like random speculation. It's actually something pretty tangible.
Right.
There is some clear like revenue model, and it's only enabled by the blockchain, because otherwise you couldn't really do it in a scalable way if you ran this like on centralized like servers. So that's a pretty long explanation, but maybe if I have to abstract it, I could say we like businesses that actually are able to generate revenue, right? I mean, it sounds a bit stupid, but in the VC space you sometimes have to say that because really not all business models generate revenue.
Yeah, 100%.
many don't. So, other obvious ones are, of course, like exchange. An exchange has a very simple business model. Every transaction, they take a fee. Another one would be like bridges, right? Like sort of infrastructure. Bridges is like, like the ability to move a token from, Polkadot to Ethereum, for example, right? Through a trustless bridge. So one example that I can give you is Harbour Bridge.
Right.
That's one that we just recently invested in. They make it secure. It's like next generation of bridging, because I don't know, you might remember, Wormhole and like the big hacks there where like hundreds of millions of dollars were stolen. With Harbour Bridge, right? It's more like a crypto economic co-processor, which basically means that the entire security of Polkadot also underwrites the security of the bridge, right? Which is very powerful, which wasn't the case in the previous generation. But they have a very simple business model, right? Whenever you move a token over the bridge, you get like a tiny fraction of it. And so if you kind of own, the share in this business, then you can generate some revenue, right? So again, it's a very simple, well, it's not that simple, but it's like a pretty straightforward business model.
So you would not rather bank on a speculation of a token that you have invested in, but you would rather want to bank on the revenue that the protocol generates. I think that's a great strategy. It actually does make sense. Even to traditional investor, it would make sense rather than speculating. With speculation only, it depends on the hype and trend. In a lot of cases, it's not the actual value of the protocol. So I 100% agree with you on that. Anyway, since the time's running out, I would like to say that the interview was excellent, and the insights that you have provided is going to be really valuable for me and my firm. We would like to write a lot of things about it. And I would like to thank Alisa, who coordinated this interview. And I would like to thank Gopal, who is a journalist in my company, and they coordinated this interview. And I look forward to speaking with you, Max. It was a great, insightful interview. And I thank you very much for that.
Thank you, Hardik. It was a pleasure speaking with you. And give me a shout if you wanna do a follow up at some other day. Always happy to talk.
We could do a follow up with some great topics. I would like to do some research and if find out some topics that are seeking to be answered, and then we could connect and discuss more on this topics. Till then, thank you so much for connecting.
Fantastic.
And, I wish you good luck with your firm, and looking forward to stay connected with you. Thank you.
Cool. Thank you very much. Yeah.
Goodbye.
Have a good day.
You too, man. Thank you. Bye.
Bye-bye.